Good morning. It's Friday, August 1st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we got some action going on overnight in these markets. Finally, we got a lot of red on the screen here. So looking at the markets overnight, U.S. President Trump, he imposed some steep tariffs on exports from a dozen different trading partners, including Canada, Brazil, India, and Taiwan. So if you look at the overnight action, the S&P 500 and the equity space here, you got global shares, they're tumbling as investors anxiously await the U.S. jobs report here. That could be the make or break case for a Fed cut next month. Now, if you look at the expectation, economists are forecast 115,000 job increase here in non-farm payrolls after that gain of 147,000 in June. The unemployment rate is expected to edge up to about 4.2% from 4.1%. So if you look at the stock 600, and that's one of the first things I check every day, it fell around 1% in that first hour of trading, and it was about 1.7% lower on the week, on track for its biggest weekly drop since early April. That's when the tariffs went into play. So if you don't know what the stock 600 is, it's basically a fixed number, 600 components representing large, mid, and small cap stocks among 17 different European countries, covering approximately 90% of the market cap of the European stock market. So it's a good gauge here to kind of get a sense. And one of the first things I do every day is I check, what did Europe do? What did Asia do as well here? So, and then you look at the NASDAQ, the S&P 500, again, down about 1% right now. So the S&P 500, 6,300 where we're sitting at right now. Yesterday we did have Amazon, Apple. We saw Apple, I can't get it out here. I do have an Apple on the plate over here. I haven't had that yet, but you did have Amazon stocks. They did tumble here a bit. You had Apple boost up as well. You had Coinbase sell off here quite aggressively, and that's part of the reason why you got a little bit of a dip going on in the cryptocurrency space here. So late on Thursday, President Trump, he signed this executive order imposing tariffs ranging from about 10 to 41% on U.S. imports from foreign countries. The rates were set at 25% for India on those U.S.-bound exports here, 20% for Taiwan, 19% on Thailand, and 15% on South Korea. So the number isn't exactly what matters. It's the rate of change of the number. And really what he did was he ratcheted up and he came out quite firm. Even as I'm doing this video, President Trump was talking more about these different tariffs here that are going on. So he also increased those duties on Canadian goods to 35% from 25% on all products not covered by the U.S.-Mexico-Canada trade agreement. And he gave Mexico a 90-day reprieve here on the higher tariffs because they're really negotiating a broader trade deal. So you're really getting no love here on the silver market. Down about 15 cents, not as bad as what we've seen here. But if he did have that tariff on Mexico, perhaps you might see some action go on in the silver market, perhaps to the upside. So this August 1st announcement for the reciprocal tariffs was somewhat worse than expected here in a nutshell. So you look at the Asia Pacific shares, well, they fell about 1.5%, bringing the total loss this week down to about 2.7%. So all in all, little bit of a pullback here, call it backing and filling, nothing to be too alarmed about at the moment here. Now you look at the rate cuts, and this is really where the problem started here. You had that this week. You had actually, if you rewind 2 weeks, it was when silver was at $39.91, and then Trump announced a deal with the European Union, or at least a framework deal. Gold falls $40. Silver ends up pulling back aggressively from those highs. And then what did they do? They fell $1 about the next day onto Friday, and it was really a broad spread liquidation here. So you had 7, now 8 straight days down in the silver market here. So we'll see, we're starting to hold some support, and we'll want to check the rate of change on that decline that's been going on here, because we're starting to hit some support levels here and start to come in. But you look at the Fed fund futures, they are just implying a 39% of a rate cut here in September compared to 65% the day before the Federal Reserve held those rates steady here. And that comes according to CME's Fed Watch tool. So that's one thing, if you look at my tab screen, that's one thing that's booked, and I'll check on it here periodically, mostly every day as we start to approach it, see if there's any big changes. I also look at it when economic data comes out, especially in big misses or big beats on economic data. I'll go and I'll scroll over to it, and it's not, it's implied that we're going to cut rates before, and then those rates start to fade away, or they really start to come in. But it's a fairly accurate tool on giving you kind of what the expectations are, what the temperament of the market is, and then as we approach it here, it really either pulls it away or puts it back in. So if you look at the data, much of the data will depend here, or much of now will depend on that U.S. jobs data that's coming out here today. So any kind of upside surprise could really remove that chance of an interest rate cut here next month. So again, the center forecast right around about 110,000 jobs. And again, the unemployment rate, which they're not really looking at here, edging up to about 4.2%. So you're seeing the dollar continue to find some support from this and really pushing up about 1.5% this week, and it's hitting that 100 mark, so 99.90 last, and it puts that pressure on the euro currency, the British pound, Canadian dollar, everything a bit lower here today. If you look at some of the currencies that have been in a free fall, the Japanese yen's been one of them, getting a small boost up here today. So the tariff news, it had little impact on the Canadian dollar. Canadian dollar just slightly lower on the day, and the yen, that was the biggest loser overnight, but has since recovered here. And the Bank of Japan, they've held interest rates steady here on Thursday. They revised up their near-term inflation expectations here, which they've had very little or no inflation, and that's why their interest rates are always so low here. So looking at the commodity markets, you got oil prices under just a little bit of pressure, and you got gold futures unchanged to slightly higher. Now, if you look at the copper market, and that's one that I had a lot of calls about yesterday because it was quite alarming to see that massive a sell-off here. So the copper market, small rebound overnight. And I see a lot of dip buyers coming into the copper market as we were waiting for more of a stabilization here in the copper market, kind of all the bad news coming into play before we're looking at entertaining that market in any kind of aggressive nature or broad spread base to the investing public that's with us over at Blue Line Futures here. And really what we believe is the copper market, yeah, they got the tariff right, but it was really the product wrong. And this is what I was talking about. If you wanted to tariff anything, you need to tariff that lamp over there and the little copper fittings and things like that. And that's what he's doing. You need to actually take those off, and you need to tariff the sheets and the rods. So that'll really put some pressure here on the markets because of the fact that, you know, you address the effects of the copper imports. He's saying that it's national security. Well, national security isn't importing that lamp here with a tariff. It's importing some of the sheets and the rods of copper. That's where things really come in from a national security type of standpoint here. So there'll be a 50% tariff on copper imports. That goes into effect here today, and it's only on those semi-manufactured products such as wires and tubes. The refined copper, again, it's excluded here at the moment. Now, it did talk about 2027 in January. That's where that tariff may come back into play. And I think that as those details come out, that's where copper futures are starting to come up. And you could expect copper futures, in my opinion, to kind of find some support and then steadily track higher as you get closer out. But it's January 2027 is when they're saying that next tariff may be phased in. So it's quite a long ways away. And that's why I told people that we're looking for any kind of upside quick action in the copper market. They're probably not going to see it here. So since that tariff trade on copper, we've seen really the copper market quite implode as far as the spread between LME and the COMEX here. So now the United States, they've got plenty of this metal here as traders aggressively ship the metal in huge troves to try and break through that arbitrage here, which now has come back here and come back down to more of a neutral stance here. So you look at the precious metals again, you got the dollar index just hovering here just under that 100. You got all that tariff news, got the gold market up about $2.50, silver down about 16 cents here. And if you look at gold prices, they're really holding steady. They're poised for that third consecutive weekly loss, but it's pressured by mostly the dollar index here, the declining expectations of interest rate cuts. It's the uncertainty from the U.S. tariffs here and the trading partners that's providing that overnight support. And then you really look at here the rest of 2025, they're going to be still focused on, you know, all this inflation data and things like that because they've got to get the ball rolling here if they want to get those cuts going. So we saw GDP, we saw weekly jobless claims, we saw the PCE figures, and that really puts the Fed reluctant to cut those interest rates. So you got the Fed fund futures rate at about 4.25 to 4.5% with those dampening diminished expectations for the September rate cut here. So, you know, the focus now, again, is going to be on this jobs report coming out here today. So we'll see what that brings here. So you guys got any questions? Have a great weekend here. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck and good trading.